Somewhere off the coast of Singapore right now, there is a piece of steel longer than the Empire State Building is tall, carrying more cargo than some countries' navies weigh combined. And someone, somewhere, just bought it. Not leased, not chartered, bought. Like a house, except this house costs up to $250 million, flies a flag from a country it will probably never visit, and might be crewed by people from 4 different continents who've also never met the owner. This is the story of what it actually takes to buy one of the machines that quietly moves 80% of everything you own. And by the end, you'll understand why the smartest people in this industry have stopped trying to run ships and started just trying to own them. Let's start with the unit of measurement, because it explains everything else. Container ships are sized in TEU, 20-foot equivalent units. One standard 20-foot container equals 1 TEU. A 40-footer, the more common size in global trade, counts as 2. From there, the industry sorts ships into a rough class system, almost like weight divisions in boxing. Feeders, under 2,000 TEU, are the regional shuttle vessels. Then Panamax and New Panamax, sized to fit the locks of the Panama Canal, including the wider locks that opened in 2016. Then Post-Panamax, and at the top, ULCVs, ultra-large container vessels, carrying upward of 14,500 TEU. Right now, the largest operating vessel in the world is the MSC Arena. She holds roughly 24,346 TEU, stretches almost 400 meters, nearly 4 football pitches end to end, and stacks containers up to 26 tiers high. She was delivered in March 2023 from a Chinese shipyard, flies a Liberian flag, and is chartered to MSC by her actual registered owner, a Chinese leasing arm of the Bank of Communications. Notice how many different countries just appeared in one sentence for one ship. That is not an accident. That is the entire business model. We'll come back to it. If you want to buy a container ship new, there is really only one region on Earth you're shopping in: East Asia. As of the most recent full-year data, Chinese shipyards secured roughly 63% of all new global ship orders by tonnage. South Korea took about 21%. Japan, once the dominant shipbuilding nation of the 20th century, has fallen to under 10%. Together, these 3 countries now account for more than 90% of everything being built. But that number is not static. It's a live geopolitical fight. Through 2025, the United States moved to impose port fees, specifically targeting Chinese-built, owned, and operated vessels, an attempt to slow China's dominance of both shipbuilding and shipping. In response, South Korea clawed back market share for the first time in years, and the 2 governments briefly agreed to suspend the fees while negotiations continued. Shipbuilding, it turns out, is not just an industrial sector, it's a lever of trade policy. Here's the part that surprises most buyers. Even with all that capacity, you cannot just walk in and order a ship for next year. Global shipyards are so backed up that a new order today routinely quotes delivery in 2028 or later. One shipping executive summed up the mood at a recent industry forum bluntly. Delivering in 2028, he said, did not look sexy, and warned buyers to lock in refund guarantees before signing anything in case the yard itself doesn't make it that far. If new ships take too long, buyers turn to the second-hand market. And this is where container shipping stops looking like industrial procurement and starts looking like a casino. During the COVID lockdowns of mid-2020, a small feeder ship could be picked up for around $4 million. 1 year later, same class of ship, the price had quadrupled to roughly $17.6 million. By July 2022, at the absolute peak of the market, Maersk paid $134 million for a single 12-year-old second-hand vessel called the Northern Jupiter. Then, the music stopped. By mid-2023, a 20-year-old 7,000 TEU ship had lost nearly 68% of its value in a single year. People who bought at the top were suddenly sitting on assets worth a fraction of the purchase price. You'd think that would be the end of the volatility. It wasn't. Red Sea attacks on shipping beginning in late 2023 forced carriers to reroute entire fleets around the Cape of Good Hope, instantly soaking up spare vessel capacity 2020 and sending charter rates climbing again through 2024 and 2025. And now, in 2026, the pendulum is swinging the other way once more. With a partial reopening of Red Sea routes and a wave of new ship deliveries hitting the water, analysts are warning of the opposite problem: oversupply. Global container fleet capacity is projected to grow by more than a third between 2023 and 2027, even as demand growth is forecast at only around 3%. Freight rates have already been sliding through early 2026, and major carriers like Maersk have signaled softer profit guidance for the year ahead. This is the defining feature of the entire industry. The physical assets, the actual steel, barely change year to year. Their price does nothing but change. So say you've picked your moment and your ship. How does the deal itself actually work? Because it looks nothing like buying a car or even a house. You hire a shipbroker, firms like Clarksons, Braemar, BRS Group, or Howe Robinson Partners dominate this niche market. Your broker negotiates on your behalf, and once both sides agree, they sign a memorandum of agreement, almost always using the Norwegian Sail Form 2012, the closest thing global shipping has to a standard contract. The buyer puts down a 10% deposit within 3 banking days. Then comes the inspection period: class records, certificates, condition surveys. Assuming everything checks out, you move to closing, and the closing itself is genuinely theatrical. Both parties' representatives physically gather. The seller issues a notice of readiness. The buyer wires the remaining 90% within 3 banking days. Both sides sign a protocol of delivery and acceptance, and the contract requires the ship be delivered free from all charters, encumbrances, mortgages, and maritime liens. And just like that, you own a 50,000-ton object floating somewhere off a port you may never have visited. But you can't sail anywhere yet because your ship doesn't have a nationality. Every ship in the world has to register under a national flag, and this is where the industry reveals just how detached from geography it really is. As of the most recent registry data, roughly 70% of the world's merchant fleet flies a flag from a country other than the one where its owner actually lives. 3 registries dominate: Liberia, Panama, and the Marshall Islands, together accounting for close to 45% of the world's shipping capacity. As of 2024 to 2025, Liberia actually overtook Panama as the single largest registry by gross tonnage, while Panama still leads in raw number of vessels. These are what the industry calls flags of convenience: minimal taxes, lighter labor rules, and the freedom to crew a ship with sailors from anywhere on Earth. Liberia's entire ship registry, one of the largest fleets on the planet, is actually administered out of an office in Virginia, in the United States. The Marshall Islands Registry is run from Virginia too, by a private company that keeps a cut of gross registry revenue. Then there's Mongolia, landlocked. Its capital sits roughly 1,400 kilometers from the nearest ocean, and yet Mongolia has operated an open ship registry since 2003, administered from Singapore, because a flag registry, it turns out, doesn't need a coastline. It just needs a law and a bank account. The registry earned the Mongolian treasury a modest sum in its first year, but had grown to over 1,600 registered ships within its first decade. This system isn't just quirky, it's under real geopolitical pressure right now. In 2025, Panama moved to refuse registration of tankers over 15 years old, a fairly transparent attempt to purge aging shadow fleet vessels tied to sanctions evasion. In February 2026, Cameroon's registry was shut down entirely by its own government after investigations found ships were being fraudulently reflagged there to dodge Western sanctions on Russian oil. The tools international regulators have to police any of this, a genuine link requirement between a ship and its flag state, exist mostly on paper. In practice, enforcement depends almost entirely on the honesty of registries that earn money by asking as few questions as possible. You have a ship, you have a flag. Now comes the part nobody budgets for properly: actually operating it. A large container ship runs with a crew of around 20 to 25 people, commonly Filipino, Indian, Chinese, or Eastern European. A Filipino captain on a major line can earn somewhere in the $9,000 to $15,000 a month range. A junior officer closer to $3,000 to $5,000. Most owners don't manage crewing themselves. They outsource to ship management firms. One of the largest, Bernhard Schulte, manages around 600 vessels and employs some 18,000 seafarers worldwide. Then, there's the operating budget. The average daily operating cost of a large container ship has been estimated at roughly $7,500, and that figure doesn't even include fuel. Add bunkers, voyage costs, and insurance, and total annual running costs for a large vessel can land anywhere between $20 and $50 million a year. Insurance itself runs through a unique global system: P&I clubs, protection and indemnity associations. 13 mutual clubs cover roughly 90% of the world's ocean-going tonnage between them. When something goes catastrophically wrong, the 2012 Costa Concordia disaster, for example, claims exceeding $1 billion get settled through exactly this system. So, how does this pencil out financially? You charter the ship out. There are three basic structures: a voyage charter for a single trip, a bareboat charter that hands the vessel over entirely, and a time charter, where an operator hires your ship for a fixed period at a daily rate. Rates for these contracts are tracked by an index called HARPEX, and its history is a case study in volatility. It bottomed out around 412 points in June 2020. By February 2022, it had rocketed past 4,250, more than 10 times higher, before crashing roughly 70% by mid-2023. Heading into 2026, HARPEX has settled into the low 2000s, a level industry analysts now describe as steady, which, in this market, is its own kind of remarkable. Here is the single most important economic insight in the entire industry: the smartest money isn't operating the ships at all, it's owning them and renting them out. Companies like Seaspan, Costamare, Danaos, Eastern Pacific, and Zodiac Maritime specialize in exactly this. They're called non-operating owners, essentially the landlords of the sea. While container shipping lines watched profits collapse by 60 to 95% during the 2023 downturn, Danaos's adjusted net income actually climbed because the company had locked in charter contracts at pandemic-era peak rates before the crash. Same industry, same crisis, completely different outcome, depending purely on which side of the lease you were sitting on. Every ship eventually reaches the end of its working life, usually after 20 to 25 years. Most are sent to one of 4 shipbreaking yards: Alang in India, Chittagong in Bangladesh, Gadani in Pakistan, or Aliaga in Turkey. Together, these sites handle roughly 90% of all ship recycling by tonnage. Payment here is measured in dollars per light displacement ton, essentially the ship's stripped steel weight. Bangladesh currently pays a premium of $40 to $50 more per ton than Indian yards, which is quietly pulling business away from Alang, even though India pioneered the modern shipbreaking industry almost by accident when a ship ran aground there in 1983 after its captain anchored at the wrong lighthouse. Industry analysts now expect a genuine boom coming. As many as 15,000 vessels globally may need to be decommissioned between 2026 and 2035 as the current generation of ships built during the 2000s trade boom finally ages out. The work itself remains brutally dangerous. Independent monitoring groups have recorded hundreds of worker deaths across South Asia's shipbreaking beaches over the past 2 decades, and environmental researchers have documented elevated levels of heavy metals in soil and crops near some yards. The hidden cost at the very end of a ship's economic life. If you want to know whether any of this is actually worth it, look at the one family that has played this exact game longer and more successfully than anyone alive. In 1970, a former ship captain named Gianluigi Aponte and his wife Raffaella raised roughly $280,000 to buy a single second-hand German freighter. They named their new company Mediterranean Shipping Company, MSC. Today, MSC operates close to 1,000 vessels, controls roughly 1/5 1/10 of all global container shipping capacity and remains entirely privately owned by the Aponte family. No public shareholders, no quarterly earnings calls, just 5 decades of compounding decisions about exactly the kind of assets we've been describing in this video. In April 2026, Gianluigi Aponte formally handed control of the company to his children, Diego and Alexa, while remaining chairman. Forbes now estimates the family fortune somewhere in the tens of billions of dollars, by some counts, among the largest privately held fortunes in shipping history. And the family's ambitions have expanded well beyond ships themselves. MSC recently partnered with BlackRock on a roughly $19 billion deal for port infrastructure on either side of the Panama Canal, the very choke point that defines an entire class of vessel in this industry. So, should you buy a container ship? If you happen to have somewhere between $50 and $260 million sitting around, an appetite for 10-year boom and bust cycles that can erase 70% of an asset's value in a single year, a tolerance for legal paperwork that traces back to 1912 Norway, and a willingness to fly a Liberian flag administered out of Virginia on a ship you might register in Mongolia, then yes, you absolutely can. People have been doing exactly this for over a century. A few of them are now worth tens of billions of dollars. The door, remarkably, is still wide open. The strange part is what happens after you walk through it. Once you understand how a container ship actually gets bought, flagged, crewed, and chartered, it becomes very hard to look at anything on a store shelf the same way again.